All right, friends, Frankie here, and today we have a really special experience in store for you. One that has to do with deploying smart contracts on Bitcoin, right? So before we begin, I'd like to just announce that next Thursday, April 29th, we're going to kick off our three-part series, How to Build on Bitcoin. We start with special guest Hasib Khosari with Dragonfly Capital and Vijay Papti. Oh my gosh, I'm working on the pronunciation here. On creating a crypto startup. So if this conversation excites you, make sure that you subscribe to our updates by clicking on the greenhouse above my avatar, follow Crypto Internet. So today, however, we have a special treat for all of you. Many of you came into this room interested about smart contracts. Many people are going to tell you that smart contracts are not possible on Bitcoin, but this is not the truth. For example, 59 new Clarity smart contracts have been deployed in the last 2 months, and today you're going to get to learn all about it with the creator himself of Clarity Contracts, Muneeb Ali. So without further ado, allow me to introduce our host. We have Patrick Stanley. He's the CEO of Freehold, a crypto community development company that incentivizes crypto holders to actively participate in education and other building activities. And then we have Muneeb Ali. He's the co-founder of Stacks and the CEO at Hiro. Muneeb is building the future of the internet through Stacks. So jump into the jungle of Google and get familiar with Stacks. It's literally building the next internet.
Awesome. So I think we can jump straight into it. Let's see what questions people have, and we'll just take it from there.
Awesome. So if anyone has any questions about smart contracts on Bitcoin, come up to the stage, get involved, ask any questions that you'd like. We really just want to be here to serve you today.
They are here to be served.
Alrighty. Yes, Mika, come on up. Thank you. All right.
And maybe while we're oh, cool. Miguel, do you wanna go ahead?
Sorry, I was joining. Yeah, so I'm a developer myself, and I've been looking at a lot of Ethereum and learning that, but I know they have the Solidity language. What would you do for Bitcoin if you wanted to get into smart contract? Is there one specific language that we should be writing in or learning to be able to get into that world?
Yep, that's a great question. So I think the first difference here is Ethereum and a lot of the newer generation blockchains. They would typically have smart contracts at the base layer, right? So there are pros and cons to that. But for Bitcoin, the base layer programming language is fairly limited, the Bitcoin script. And most of these smart contracts, they're basically kind of in side chains or connected chains like Stacks. You can think of that as layer 2 technologies or things that kind of connect to Bitcoin and try to bring smart contracts to Bitcoin. So the base layer, and there are interesting R&D projects that are trying to do more complicated scripting directly on Bitcoin. But in general, I'm in the camp that the base layer should be as simple as possible, right? And then you can have these smart contracts directly on top. So in that sense, you have a bunch of options here on the Bitcoin side. There's a project RSK, which is a side chain for Bitcoin. They're actually compatible with EVM, so you can do Solidity style contracts on RSK. For Stacks, we actually took a different approach. I'm just my background is computer science, and I've never been a fan of the JavaScript language. I'm definitely not a fan of using a JavaScript language as a smart contract language, because that has a whole host of problems with there, because smart contracts are really for security, right? You really want to make sure that if you're keeping hundreds of millions of dollars on your contract, that there isn't a bug through which money can be stolen, and you're looking for formal verifications, the kind of environment you're deploying these things in are very hostile, and you can't change this thing after you deploy it, right? So using a JavaScript-like language or using a Turing-complete language is actually would be something that I would personally avoid, and there are a lot of people who are in that camp that they would want to avoid as well. So the design of Clarity is really motivated by that. Clarity is a decidable language, meaning that you can actually know precisely what the smart contract is going to do before it executes. And that's like a night and day type of a difference, right? Either you don't know what this thing is going to do, or you know what it's going to do. So Clarity in the camp of being decidable and predictable, and then you can have formal verifications for your code as well, and so on. I don't know if that directly answers your question, but basically at a high level, different types of smart contracts are possible around Bitcoin. We focus on Clarity, which is a predictable language. From a syntax perspective, it might remind you of Lisp, and versus like a JavaScript or some other language.
All right, so you're building your own framework on top of the Bitcoin scripting language, essentially.
So it's basically, so a lot of this is kind of like hidden from the developers. If you go through the Clarity tooling, what happens is that Stacks, the blockchain that connects to Bitcoin, actually has visibility into Bitcoin, right? So as a Clarity programmer, you can have logic that you're writing against the Bitcoin state. And currently, this is in more R&D phase, where you could even trigger actions on Bitcoin in certain ways, right? So you're not directly working with Bitcoin script. It's not like you're writing code and then it compiles to Bitcoin script and runs on Bitcoin. That's not what's happening here. You have a environment where you can deploy your code. That environment has visibility into Bitcoin state. So if something happens on Bitcoin, your program will react to it automatically once it's deployed. And then you can even have triggers. And this part is like more in the R&D phase, where your program can actually trigger a transaction that happens on Bitcoin.
Okay, that's awesome. And so, like, how are you guys? Are you guys already, since you're in the R&D phase, are you guys looking into like preventing things like the DAO hack that happened with Ethereum a couple of years ago?
Yeah, so there's a really good post. I think the way to search for it on Google is probably search Jude Nelson Clarity exploits or something like that. And I think it'll likely show up, and it makes a list of like 8 different types of security problems that are not just theoretical, but they've actually happened with Solidity. Things like reentrancy, which was the issue with the DAO hack, right? And it walks you through the design of Clarity, that why the Clarity language is actually designed in a way to avoid like these different classes of problems, right? So it's not a one-off thing, right? Like a lot of people, their understanding of the DAO hack, for example, is that it was a hack to something, right? Like it was actually like a pretty fundamental thing with the underlying programming language, Solidity, which allows for reentrancy, and which is the thing that you need to disable, right, to avoid developers to make mistakes like that. And so that I would highly recommend that post. I think the best way is just search in Google for it.
Awesome, thank you. That answers a lot of questions. I've been very interested in seeing Bitcoin smart contracts, and it's just not as easily accessible, I guess, to find that information on the internet compared to like Ethereum or Cardano, like as they're building. But thank you so much.
Yep, absolutely. I do think that this is a big area to focus on in general, where I do think Bitcoin script is not meant for a lot of people to really use, right? Like Bitcoin is not the main blockchain is not really meant for people to write new type of code and kind of like run there. And Bitcoin script even like disabled a lot of even the opcodes by design at the Bitcoin script level, right? And I think it's these newer type of languages like Clarity, or I think Lightning is working on something like RGB and so on, where that will most likely be the path through which developers discover smart contracts for Bitcoin. And I do think the tutorials and the documentation around it can go a long way. Because otherwise, like, I'm actually surprised by how big of a misconception there is out there, where people think Bitcoin is kind of like a rock, or it's like a old clunky blockchain and you can't do anything interesting with it. Whereas like there's nothing fundamental about Bitcoin that is stopping you from having smart contracts around it. In fact, most base layers, when they get popular, they become congested. So we see that with Bitcoin with high fees, we see that with Ethereum with high fees. So most of this functionality is going to move to layer 2s anyway, right? And at that point, there's literally no difference between a layer 2 running on Ethereum versus a layer 2 running on Bitcoin. The difference is that Bitcoin has a higher level of security in terms of the hash power, the bigger brand, the bigger community, and Bitcoin has $1 trillion of capital. That if you can program that directly, there's a much bigger market. And I think that's where we come from.
Awesome. Thank you so much for that.
Awesome. John, do you have a question?
Oh, well, Miguel asked my question, so he beat me to it. So I was just curious how the Clarity programming language was different than Solidity, and you just went over that. So thanks. I'm gonna mute myself and leave the stage.
John, okay, that's fine. But John, I'm curious, now that you understand it, how would you explain it to us?
Well, I'm not sure. I'm an accountant learning to code, and I have some familiarity with Python, but I don't know that I would be able to describe to someone else because I don't have any experience with the Java-based coding yet. I'll probably get into that at some point, but
let me actually take another stab at it for some of the differences. So I think the way to think about this is that there's a class of programming languages that are considered Turing complete languages, right? So they're very generic. You can do almost anything you want with it, right? And this is separate from the syntax of a language, right? The syntax is something that actually developers feel more. Like, for example, if you've written a Python program, you're mostly just trying to work with the syntax, and you want to make sure your code actually works. And different languages have different way of doing things. Even simple things like 2 plus 2, like different languages have a different syntax. So I'm not talking about the syntax here, right? So from a syntax perspective, Solidity is very similar to JavaScript, and a lot of people know JavaScript. A lot of people also hate JavaScript, right? But that's what it is. That's what the syntax is. I'm talking about the underlying design of the language itself. So if you have a Turing complete language, yes, it's very powerful because you can do whatever you want with it. But that also means that it's very, very hard to have bounds on these programs or have mathematical guarantees for certain things. Like, it's not like it's impossible. You can have formal verification, but it's just very hard and it's a lot of work, and you won't have full verification and things like that. Whereas, let's say that you create a subset of a Turing complete languages, you give up on certain abilities. Like, let's say I'm doing a rough approximation. Let's say that you have 90% or 95% of the functionality, but you give up some features, right? But suddenly, now you're in the class of programming languages which are called decidable languages, and decidable languages are very precise, right? You know exactly what these computer programs are going to do, right? And the way it's going to show up for you as a programmer is that, for example, when you're publishing Solidity code, there's an estimate for gas fee, because you actually don't know how much gas this thing is going to consume, because you actually really don't know what the program is actually going to do, which is a scary thing for a smart contract, right? Because you're dealing with money, these things are not reversible. If something goes wrong, it's done, right? So that sort of unpredictability is actually pretty scary. Comparing a decidable language like Clarity, you would actually know precisely the exact amount of gas fee that this thing is going to consume, because you know precisely what this program is going to do, even before it runs, right? So that's the main difference, right? And how it's going to show up in terms of the syntax is we could have decided on a different syntax, but the main designer who was working on it, Aaron Blankstein, he was with me at Princeton, and he worked at the Microsoft Research Compiler Group as well. And he's a big fan of Lisp. Lisp is a language where if you're really into it, you would enjoy that a lot. But it also has some inherent properties where it makes it much easier to reason about those classes of languages as well, right? So we ended up going with a Lisp-like syntax, but I'll differentiate the syntax from like some of the underlying design principles, if that makes sense.
Yes, thanks. That was helpful.
Cool. Who's next?
Hey, Nicholas, do you have a question? We have Nadav coming up. Great.
Hello. Yes, just trying to unmute myself. Hi, Muneeb. I'm actually talking from Bolivia, here in South America. I first heard of you in a book by George Gilder. He talks a lot about your project and stacks. I found it quite interesting. I'm not from the computer science world. I'm actually kind of trying to learn code, as many people, I guess. And I guess my question is, I come from a very informal economy. Most people here trade and stuff, but they shun to get into the formal economy and try to get with the government. And I don't blame them, because government does not do much for us over here. And so I'm trying to figure out what real world applications have been more successful in your system. I mean, in the stack system. I don't know if I'm asking the right question even, actually. Sorry.
No, thanks a lot. And yeah, the George Gilder book is great. He did a great job. I've heard that he started looking more into Bitcoin forks after that, and hopefully, we can get him to pay more attention to the Bitcoin main chain. But to come to your question, I think in general, I would say that in the grand scheme of things, the Stacks 2.0 blockchain is our master design. That's the thing that we were truly working towards. We did publish a more limited system earlier, Stacks 1.0, that actually did not have smart contracts. So you can imagine there's a fairly limited design if you don't have smart contracts there at all. So the real system has only been online since, I would say, mid-January or so, right? So we are in month 3, and so far, I think I just tweeted out today that people have published almost 59 different smart contracts. What people are really doing is they're interesting. I think right now we're in the building blocks stage a little bit, right? Where, let's say that you want to have a Bitcoin lending application. As soon as you start working on a Bitcoin lending application, you would realize that you actually need some sort of a stable currency, right? So then you'll start thinking about, maybe we first need to design a stable currency, because you need your collateral to actually be in a stable currency and so on, right? So there are some basic building blocks. Or you're thinking of introducing an asset, and then you'll be like, hey, where are people going to trade this asset? And you certainly start looking into decentralized exchanges, because you would want to be able to swap one asset for the other, right? So I think right now we're in a stage where people are building a couple of these building blocks. I think those would be the equivalent of decentralized exchanges, stable currencies, some sort of liquidity protocols, and there are various attempts at it right now, which is actually exciting to see in a decentralized ecosystem, because you want people to have different kind of designs and attempts at building these things. I would say at that stage, my guess is it would be a couple of months before there's at least one good option available for each kind of this Lego block, right? And then developers could really start working on their core applications that they want to build. For example, I'm personally interested in a Bitcoin lending application. Not that I would build it myself. I would probably fund it, invest in it, try to get some team to build it, and then then there are interesting things happening on the NFT side already. Like there's a application called Boom. You could go to boom.money to check it out. But it's a smart contract that defines NFTs that actually, because of the way Stacks is designed, is settle on Bitcoin, right? And if you think about NFTs, the main value proposition is that these things have strong ownership, and you can actually have guarantees that the NFT or the ownership is not going to go away. And Bitcoin is the most durable blockchain out there, right? So these things are not going to disappear 50 years from now, 100 years from now. So people doing interesting things with NFTs, with smart contracts on our system is actually a very, very promising area as well.
Right. It's interesting you mentioned the lending application. I actually work in a bit of a real estate. For example, here you have half the population can't access to credits, like bank credits, because they're not in the system. But they do have, you can see them trading, and it's amazing how the people here purchase and move around. They don't pay taxes, of course. But there's a big amount of people that could access to other types of credits, probably envisioning something like creating some type of token where you can use it to finance and probably lend money, I guess. That would be an application for this, I guess.
Yes, absolutely, right. So I think if you look at Bitcoin lending desks, on average, some of the top desks would do, I think the numbers are anywhere between $3-4 billion to $7 billion of lending activity in Bitcoin. That's a huge market, right? And right now people are actually going through some trusted third parties for these lending activities. And the key thing that smart contracts actually brings is that you now have reduced risk, because you don't have custodians in the middle, you don't have like trusted third parties in the middle. And if you unlock like these lending markets, which are completely peer-to-peer and trustless, like that's a huge opportunity, which again unlocks a lot of potential around the world.
Right. What would you recommend for me to investigate on that, to probably learn more how it works?
Yeah, there was a tweet thread I had about a Bitcoin lending application. That's a good place. But I think in general, I would say our Telegram channel for Stacks and our forum are great places where a lot of these like-minded people are gathering and kind of talking to each other, and even trying to build these things together, right? So it's a pretty exciting time in our ecosystem. We're getting a ton of people who are joining our Discord, talking to developers, and
right.
Those areas would be great places. Thanks so much.
Okay, sorry, I don't want to monopolize the conversation. Thank you very much. You've been very helpful.
Awesome, thank you.
Thank you, Nicholas. Hey, Sean, how's it going?
It's good, Frankie. How are you?
I'm doing great, thank you. Do you have a question for Muneeb or Patrick?
I do a little bit, and it's more on the growth side. So I love Stacks, love Muneeb and what Patrick are doing between developing this blockchain and helping to market it. So I guess a lot of my questions are really around the growth strategy and maybe industries and markets that the team, the Hiro team is focused on going after first. I think the financial markets is really an obvious place when we talk about transforming that and bringing Bitcoin to the forefront as an asset class, and Stacks is a great tool, a necessary tool even. But I'm wondering where else maybe that's not as discussed as often outside of the financial markets, what Muneeb or Patrick see as opportunities for growth for the Stacks blockchain, and maybe start there. And I have a couple other questions too around that vision as well, but I'd like to maybe start there.
I'm happy to weigh in just a little bit and cede it to Muneeb. There's a really good blog post that Union Square Ventures put out a couple years ago, and it was actually just like a picture essentially of the what they project that the evolution of crypto will look like. Essentially, their thesis was the whole user experience in crypto is based around a public-private key pair. And so people over time are going to find that key pair more valuable, more useful. But first, what they're going to find the most useful is just growing wealth. So like, you see this with people holding Bitcoin, people creating DeFi applications, like you mentioned, financialization. And their prediction was that the first 5 years of this decade will be essentially focused on the financialization, of kind of like what crypto can unlock for end users. People will value their public-private key pair more. So, like, if you have a lot of Bitcoin, you might self-custody it, might put it in like a safe somewhere if you don't want it to be confiscated. And then in the latter half of this decade, you could see they sort of predict things like privacy-based apps that require that require private keys to log in as the natural kind of like thing to follow that, because people will have sort of like either learned the value of their public-private key pair, and also the UX for that public-private key pair will have gotten better because companies will offer better solutions. So I really do think that this whole decade, essentially, everyone's going to become an investor, and people are going to grow an insane amount of wealth. I think that's going to happen. I think the focus almost by definition of the fact that blockchains bring markets into pretty much everything, and that users can sort of value ownership of their own wealth through their public-private key pair, I think kind of forces the kind of like DeFi financialization side of things first. Insofar as like growth, like with something like, I mean, Muneeb and I are stackers. We're like stacks pilled. Like if you hold stacks, it's kind of hard to it's kind of hard to sell stacks because it's yielding 10% right now APY in Bitcoin, and so and if the price of stacks goes up, for example, the APY can stay relatively the same, but the actual net yield in Bitcoin that you're earning can go up loosely commensurate to it. So like we're very biased towards stacks, and I think if you think about it in terms of like what do we want to accomplish, like growth wise, getting on first base and having like the first user experience of someone who's holding stacks to be earning Bitcoin is by far like a sufficient first user experience. There will be other user experiences that are like second base, third base, and home. I think like home is like you have complete sort of you have like essentially the end user is like all their applications are being signed into through a public-private key pair and not just financial apps. But that's going to take like that might take 5 years to a decade to occur. So like to me, and what I'm focusing on at Freehold is just educating people, because I think as soon as you educate people about stacks, get them stacking, get them experiencing it, they're like changed. They're not going to. They're like a different person in a way, and in a small way, but that is like a great user experience. And so our main focus is how can we get as many people to essentially become stacks pilled, for lack of a better term, as possible. And we're focusing primarily on creating educational content, and actually we're focusing almost entirely on that. Yeah, so that's kind of my answer.
Yep, that makes sense. And I think what I'll add is like stepping out a little bit. I think in general, the growth strategy is, and our main thesis really is that this next crypto internet is going to be built on Bitcoin, right? And Bitcoin is actually leading the charge for crypto, like in the sense that most people hear about crypto from Bitcoin first, and then they discover everything else, right? Like Bitcoin is by far the biggest brand, Bitcoin has by far the largest community. Bitcoin is a thing that corporate treasuries are buying, right? So it's a little bit like Bitcoin is the largest growth strategy here. Like when people really understand Bitcoin, when they understand that they're actually holding assets that are losing value, and they need to exit to something that can actually hold value or appreciate in value because it's digital gold, or it's a much better store of value than other things. I think that's a very, very, very powerful movement, right? So I think actually Paul Graham had this tweet. He was talking about that a lot of really, really big movements on the internet, they were actually born at the intersection of two very powerful forces. And I think the example that PG gave was the internet and social networking. Like, so Facebook was born out of that. Those are very, very powerful forces. If Mark Zuckerberg wouldn't have done it with Facebook, somebody else would, right? So something was going to happen with those two forces. And I think like Stacks actually stands at the intersection of two extremely powerful forces. And one is Bitcoin, and the second is actually smart contracts, right? And these things are going to happen, like regardless of like me or Stacks or other things. It's just like, you know, who's going to make them happen, and who's gonna make sure that they happen in a thoughtful manner, right? So that's what we are trying to do. Like, we are trying to stand at the intersection of these two things. Right now, we have $1 trillion as Bitcoin capital. 5 years from now, we might have $10 trillion in Bitcoin capital. And right now, we have smart contracts and other disconnected, smaller blockchains. But one way or the other, smart contracts are going to come to Bitcoin. Like, developers would want to do interesting things with these trillions of dollars of crypto capital. And I think that's kind of like the bigger framework that we have. And then you start getting into growth strategies, right? So for me, the more I think about this, the biggest bottleneck by far right now is just the number of engineers and developers who can actually build smart contracts or who can actually build decentralized applications. I think that is by far the biggest bottleneck. If you look at some of the smart contract projects like Polkadot or Solana and others, like almost every project, including Stacks, right, has millions of dollars to throw at developers to get them and come and build on top of their ecosystems, right? Like, money is actually not a problem in crypto, right? Maybe it's a problem in other ways that there's too much money, right? But it's not a resource constraint here. And imagine Electric Capital had a very, very, very nice report on the amount of developer traction in crypto. And the stats right now are Ethereum has something like 2,000 monthly active developers. And then the top 5 projects after that, Stacks is included in that, and basically have close to 100. Right? So Ethereum is an order of magnitude bigger because they have an early head start and a lot of marketing and kind of like hype around it. But the newer players are all kind of like the next top 5 are all in the 100 range. But in the grand scheme of things, it all basically rounds down to 0 at this point, right? Like none of this is significant if you look at the broader developer market. That is millions and millions of developers, maybe 20 million developers, at least 10 million developers out there in the world. So what's going to happen is that in the end, yes, it's going to be like good applications built and the underlying platform winning. Like, for example, the bet with Stacks is that Bitcoin is going to win as digital gold and as a store of value. And I think I feel very confident in that bet. After that, it's all about developer interests. So what are the funnels? What are the pipelines? Where are these developers going to come from? And by far, these 99.9% of developers are not in crypto right now. So I think we are actually looking at a lot of efforts with top universities, with creating courses like both on kind of like Crypto 101 or Crypto Fundamentals, and really making it a global movement where we have actually partnered with some of the top universities, both in the US, this is not like fully announced yet, and also internationally. And you would sort those MOOCs for local languages and basically training the next generation of developers. And a lot of this would actually happen in the next bear market, right? Right now we're in a bull market. There's a lot of interest, lots of kind of like hype going around. But what's going to matter is what are the projects that got a lot of real organic developer traction and built a real community that believes in the mission over the long term. And I think this is what Patrick was mentioning when he was talking about education. Like Patrick is and Freehold, they're going after crypto enthusiasts around protocols, which is a very special thing. Like it's not just the developers. I think crypto projects, they tend to pull in extremely enthusiastic people who might not be who might not be developers, but they can contribute in so many other ways. And just like developers could self-organize on something like GitHub, these community members can self-organize on Freehold and basically help the open source protocol. So I do think like education, not just on the technical and developer side, but also on the community side, can actually go along. But I want to quickly share one last thing is that today we actually announced initial plans for a Hiro platform, which is a hosted service that's meant to make it super easy for developers, startups, or enterprises to build on top of Stacks and Bitcoin. And I think these things can go a long way because once you start looking at the enterprise market, yes, you will need to educate the developers who work at these large companies, but then you will also need to give these enterprises basically packaged solutions that make it super simple for them to get started. I think that's where my company Hiro can play a good.
Wow, yeah, that's awesome. There's a lot in there that I could easily dig into. So I appreciate all the comments from both Patrick and you, Muneeb. That's really helpful to understand. I'm a stacker myself. I love stacks. I do love Bitcoin. These laser eyes are there for a reason, and I absolutely do agree with much of what you said in terms of painting that vision, and really appreciate you going into details too around some of the challenges. Just kind of maybe in that same vein though, or as follow on, where do you see the rest of some of the smart contracts blockchains going, right? I mean, Ethereum isn't going away, and unless you are a full Bitcoin maxi, right, that there's always going to be alternatives, right? And there's going to be custodian markets still where people have solutions like wrapping Bitcoin, which there's an opinion on that, but I won't get into it. But I'm just curious: do you see that coexisting, or do you see that eventually the market itself will gravitate towards Bitcoin as a settlement layer?
Yeah, I think that's a $1 trillion question, right? When I say $1 trillion question, what I mean by that is that there will be a smart contract platform in, let's call it, the next 5 years, max, let's say the next 10 years, which will be $1 trillion protocol. Like I think it's the writing is on the wall at this point. So interestingly, what happens with kind of like, you would notice on Twitter or other places, like, sometimes things become very tribal between Bitcoin and Ethereum. And the reason is actually pretty natural, right? Like it's a little bit like when there were two superpowers in the world, right? So Russia and US would kind of like go against each other. Or these days, maybe China and US are trying to go against each other a little bit. Because Bitcoin has found product market fit on the store of value side or reserve currency side. And Ethereum has gotten interesting early developer traction on the smart contract side, right? So the bet that people on the Ethereum camp are making is ETH could become money, right? And that's the meme. If you go to the really diehard Ethereum fans, focus and talking points around ETH is actually quote unquote ultrasound money, right? Or ETH can become money and so on, right? And interestingly, my theory, I think I might have tweeted this out, that the Bitcoin versus Ethereum debate will continue until smart contracts win on Bitcoin or ETH becomes money, right? And but what I mean by ETH becoming money is that literally Ethereum has a bigger market cap than Bitcoin, and corporate treasuries are buying Ethereum as a hedge against inflation, right? I personally don't think that's going to happen, because I think Bitcoin has all the right properties and the simple, secure base layer. ETH to me is way too experimental. for corporate treasuries to be buying it as a hedge against inflation. That's just my personal view. And then obviously I'm going to put my money where my mouth is. And we're trying to bring smart contracts to Bitcoin, which to me actually both logically makes more sense because you mentioned synthetic Bitcoin wrapped assets, right? Let's walk through them. So let's say you have wrapped BTC. When you're using wrapped BTC, you're going through a custodial entity in the middle, and you're paying taxes. When I do a Bitcoin to WBTC transaction, that's a taxable event for me, and also on the reverse path, right? So it's a taxable event when it comes back as well. And then not only that I'm taking risk on the custody side, I'm actually taking risk of a technology stack that might be more experimental, and I might not be comfortable with it. Right? So because now my Bitcoin is represented as a synthetic asset on a different blockchain, and the reverse of that instead of taking Bitcoin and issuing it as a synthetic asset on Ethereum, if you do the reverse of that, you bring the smart contracts to Bitcoin directly, then you don't need to go through custodial parties. Your Bitcoin can remain on the Bitcoin main chain, and you can actually lend it. You can earn an interest on it. You can use it as collateral, and so on. So I think from a technology perspective, these things look very, very different as well. But in general, then there is a third camp as well, right? The third camp is not about Bitcoin versus Ethereum. It might actually be a new protocol, right? And that's where there's an entire basket of next generation blockchains that are bringing smart contracts, and they're trying to do interesting things. And actually, frankly, I have a lot of respect for some of the newer projects, right? Like they are sophisticated teams. They're building momentum. They're actually doing super kind of innovative things over there. But obviously, the biggest difference that we have from any of the pick your favorite next generation smart contract platform is that we are on Bitcoin, right? Like that's a very different market. Like we are actually trying to build on top of something that already has momentum, already has a community, already has capital, and we are trying to unlock the potential that's there on Bitcoin versus and an ecosystem from scratch.
Man, that is super exciting. Thank you for that, Muneeb. Sean, how do you feel about that?
I want to buy more.
I know.
Give me all the stacks.
Give me all the stacks. Thank you for your question.
Yeah, I love it.
Yeah. So I should give a disclaimer that we are in these rooms. We're not trying.
Not financial advisors.
It's not financial advice. We're not trying to tell anybody. In fact, if you look at our history, like it's funny that when we did some of the offerings, so Stacks is used as gas on the Stacks blockchain, and we did the offerings in the most, I would say, thoughtful and careful way possible. Right? You could actually argue that the Ethereum offering was actually an illegal securities offering, but they got away with it. That's what happened. But a lot of other projects didn't get away with it. Telegram got an enforcement, Ripple got an enforcement, Kik got an enforcement, and we actually went the exact opposite route, which was actually contrarian back then. That let's just go to the regulators and figure out the SEC qualification and do an offering that way. And our offering had pages and pages of risk factors so that everyone understands what they're really buying and what type of risks are associated with it, instead of trying to actually overhype something or kind of like do it in a way that's not compliant with the regulators. And I think just like I think a lot in the industry, they would understand that yes, that was a very kind of like thoughtful approach of and even a contrarian approach of dealing with the regulators. I think we're actually not lawyers, right? Like we're computer scientists. So imagine the type of work that we have done on the design of the Clarity language or the design of our technical stack and how it's built to last, or we've thought through like how this would look like, 10 years from now or 20 years from now. Like that is something that I would say is a big contrast from the more experimental or let's do testing live on the blockchain type of approach that we've seen.
That's awesome. Yeah, I'll step down from the stage after this last question because I want to give other people a chance. But I appreciate that, and really, a lot of what I like about Stacks was that thoughtfulness to beginning with the end in mind, right? And just seeing the potential for where Bitcoin is going to go and taking those decisions from the beginning, taking the time to go through the SEC filing, and the thoughtfulness and designing the clarity language to make it decisive and better than solidity, I think has all been really intelligent decision. So well done, Muneeb, to you and the team. I have one final question, and that is, it's more just on the mining side, actually. Part of the blocks are mined because you have someone who is willing to deposit Bitcoin to the Stacks network, right? If you have a lot of people that are choosing to hodl Bitcoin, especially now in this early stage, I'm just curious, do you see that as a risk to growth? Love to hear what your thoughts are there. Appreciate it. Patrick just submitted a Freehold article. Love what you're doing there. And Muneeb, I will look for other opportunities to contribute myself to Stacks and even look at joining the Hiro team if there's any openings. So love what you guys are doing. Thanks, Frankie, for letting me up here.
Awesome. Thank you so much. And that's a great question. Let me walk you through some of the thinking there. So interestingly, sometimes there's a lot of Bitcoin misinformation out there about Bitcoin's energy consumption and so on. And in many ways, they would say that look at the energy consumed per Bitcoin transaction. And if you look at the work that Lightning is doing or Stacks is doing, you could actually divide that number by 1,000 or maybe down the road even 1 million, right? Because right now you can do thousands of transactions on Stacks that settle as a single transaction on Bitcoin. Or technically, it's a couple of transactions because every miner is doing their own transaction. But roughly speaking, you could improve Bitcoin's energy quote unquote consumption by 1,000x or down the road by 1,000,000x through systems like these, right? So the way we've designed this is to be compatible with Bitcoin long term, not just from a technical integration perspective, but from a game theory and long-term sustainability perspective, right? Interestingly, that the work that we're doing can actually help scale Bitcoin, can actually make, actually in the long term, give incentives to miners, to our miners, Stacks miners, to pay very high transaction fees. Because what's going on is that we are packing so much valuable data when we settle on Bitcoin that these miners are willing to pay extremely high Bitcoin fees to mine these transactions, right? So it's actually healthy for Bitcoin fee market that we are using Bitcoin in this way, because these people would gladly pay $100, $500, thousands of dollars in fees because there's so much value that they're packing and it's incentive compatible with Bitcoin. Right? So what happens with, I get that question a lot, that why would anyone, especially with the hodl culture in Bitcoin, why would anyone use their Bitcoin to mine Stacks? The interesting thing is that it's not about you're spending your Bitcoin and you're unhodling your Bitcoin. It's a question of actually a trading pair between BTC and STX. And trading pairs are actually very common. If anything, these volumes are going up, right? So if you look at Binance right now, I think the BTC STX trading pair has something like $8 million of daily trading volume. That's already happening, and that's a good thing. That provides liquidity to Stacks, but it's actually a healthy thing if other assets trade against Bitcoin, because we want Bitcoin to be the reserve currency, right? It's great that if things are trading against Bitcoin and there's a lot of liquidity with Bitcoin pairs. The mining for Stacks is actually a native BTC STX trading pair that is happening on the main Bitcoin blockchain, right? So the way that works is that these miners, they will only make the trade because they're bidding and they have a probability of winning a block. They will only do it if there's a profit margin, if they're actually picking up cheaper Stacks, and then these miners can actually offload and liquidate Stacks on exchanges and make a profit. And miners are they're purely profit driven, right? And we have actually done some analysis as well. That in the early days, mining was 108% profitable, then it became less profitable, and now it's actually becoming very, very competitive. But the game theory is working. So on a daily basis, I think it was something like 100K worth of Stacks that were coming out. And there's already $8 million worth of trading happening just on Binance, and these numbers will likely, as the network grows, only go up. So it's actually a blip on the pair. It's not a big deal that these miners are actually liquidating there, but the profit margins are the thing that drives them, right? So the game theory is basically you're actually seeing more trading against the Bitcoin pair, and there's no real problem with people unhodling their Bitcoin because they're actually just participating in a trading pair. I'll mention one other quick thing that in terms of long-term sustainability. So as more smart contracts take off on stacks, the way we have designed this is when miners make these bids, they're bidding on the newly minted stacks plus the gas fees. So as right now, the newly minted stacks are the bulk of the incentive, right? But as gas fees basically increase in value, basically you're getting more smart contracts. Let's say there's a decentralized exchange and there's a lot of trading activity there, like an AMM, you will start seeing more gas being consumed. If there's more gas being consumed, that means the trading volume, quote unquote, is going up. People are willing to bid more Bitcoin to get more stacks from the blockchain. But what that results in for the stacks holders is that they would actually see their yield go up, right? And that's a very healthy metric. What that means is the people who are kind of like long-term believers and they want to hold the gas asset and they are stacking it to earn Bitcoin, the base yield just from the newly minted stacks is 10% roughly right now. It can change over time. But in over the long term, what you would like to see is actually tons of gas usage, right? Ethereum, for example, does millions of dollars of gas fees on a daily basis. And if you bring even a subset of that traffic to stacks, what happens is that your Bitcoin yield is going to shoot up, right? And that's by design because that's a very healthy metric. Network usage results in higher Bitcoin earnings for the stacks holder.
Is there a real world analog to compare what you've just said to? Like, could someone, like, I'm trying to even think of one. Like, is it like stacks acting like fuel for smart contracts on Bitcoin, smart contracts and apps on Bitcoin, but also like this sort of bond for that that becomes more valuable as you sort of terraform Bitcoin in a sense? Like, do you have a better, is there like a simple analog for the real?
Yeah, I think it's a bit hard, right? Like the way to think about this is that you are you're kind of like interested in two assets, right? One is Bitcoin, and the other is stacks. Bitcoin, you're interested in it as long-term store of value, right? And a reserve asset. And you're interested in stacks as gas, but also as a yielding asset that gives you a yield in Bitcoin, right? And what you're saying is, hey, I'm a Bitcoiner. I'm in the Bitcoin ecosystem. I want to hold Bitcoin because I think Bitcoin is going to be valuable over the long term. But I'm also interested in, let's say, earning a Bitcoin yield. And you think that it's a healthy metric if a lot of developers are building smart contracts around Bitcoin. That actually makes my Bitcoin more valuable because now I can deploy it in smart contracts. Now I can do interesting things with my Bitcoin. But also there is the system stacks, which is almost like a like a sister chain or something like that is very deeply integrated with Bitcoin. And as smart contracts take off, like my yield expressed in Bitcoin goes up, right? And I think I would find it hard to imagine what the real world analogy for that would look like, but I think my best attempt would be maybe something like, again, these things are not securities, but I'm giving an analogy that best thing would be maybe Amazon stock, that you could be bullish on Amazon, that Amazon is fundamental. So Amazon would be kind of like Bitcoin here, right? That you're bullish on Amazon, that hey, this company is so fundamental, I can take a 10-year bet on it, that it will keep growing. That's Bitcoin, like when you think it will be more valuable for a 10 plus year time horizon. And then Amazon also has AWS, like their computing platform. And if their computing platform is doing well, you're seeing some sort of a return or a yield on it, right? So that's kind of like a rough analogy that comes to mind.
Hello, everyone. I recently just started to adopt STX. Still working on it, by the way, but I'm really thrilled to hear a lot of this because I was just on Clubhouse and then I saw smart contracts with Bitcoin. I was like, whoa, exactly what I'm going to do. So I'm really excited. And then I like the fact that it's made it says it's made from a layer one of Bitcoin's blockchain, which is we use Clarity smart contracts. Yes, and we have a project ongoing. After the ban on the banks from the CBN, because I'm Nigerian, the rates in Bitcoin moved high because the sellers were now taking advantage of the ban. So I'm working on the project right now. I'm still new to the SDX and smart contracts with Bitcoin, but it's a beautiful opportunity, and devs over here we're gonna make good use of it, and it's the opportunities are just mind blowing. Like smart contracts with Bitcoin, man, it's totally awesome, and I love this shit. I love it.
Yeah, great. Thanks for your enthusiasm. Hey, go
We
ahead,
love this shit
Patrick.
too.
We love this shit. Nadav, do you have a question? I know you were
Yeah.
next.
I was just wondering, how does Clarity compare to a language like Simplicity or Sapio?
Yeah, I think it's a great question. We actually had the author of Sapio on in one of our rooms a couple of weeks ago. But I think in general, I'll speak in analogies a little bit. Like, so I think simplicity on the liquid chain, I think if people try to work with it, it would actually remind them more of Bitcoin script, right? It feels like a lower layer language, like assembly, right? I think that's completely fine. Like they made some good design decisions there, but it's also tightly integrated with the liquid sidechain, right? And I think a lot of again, big fan of Blockstream, big fan of all the work that they've done, but a lot of people probably don't fully understand the design trade-offs that they're making. The liquid sidechain is a federated network, right? That you are depending on the federation for your operations. Like it's not like a permissionless system where anyone can become a miner, right? Which is a completely okay design choice to make as long as you understand what properties you're getting, right? So with the language, you would also be deploying it on a federated network, whereas in Clarity, there are two big differences. First is that Stacks is actually a permissionless system. It's fully decentralized. Anyone can be a miner. Anyone can operate it, which I think is something that Bitcoiners would really, really like because they believe in decentralization, they believe in permissionless things. And the second thing is that Clarity has this unique connection to Bitcoin where Clarity contracts can directly interact with Bitcoin, right? Which is something that can be built out with some of these other systems, but I might be wrong. I need to double check, but I don't think it's there by default. Like Clarity from day one is designed as something where it can react to Bitcoin chain. We're doing some R&D on actually triggering direct changes to Bitcoin state if we can from Clarity. And the final thing would be that the discussion that we had earlier about a decidable language. So Clarity would, from a syntax perspective, it would look more like Lisp, but from a design decision perspective, it's a decidable language. And I think there are certain really nice properties of decidable languages that would appeal to a lot of developers, if that makes sense. Quick comment on Sapio, like that is more like a language that will be on the Bitcoin main chain, right? So anything that you're doing on the Bitcoin main chain, you start getting into the same, again, big fan of the work, right, of Jeremy and what he's doing, but you start getting into the things like, where is the smart contract state going to be stored? Is it going to be on the Bitcoin chain? Then there's a limitation on how much you can store there, right? Then again, it's a question of block times, or if you're chaining transactions together, like a single logic chain might actually take a while if you're waiting for one Bitcoin block, second Bitcoin block, third Bitcoin block. It could be very powerful. Actually, we would love to explore ways to have something like Sapio directly interact with Clarity. Like, again, these are design trade-offs, and I think optionality is good. So something like Sapio that can have, let's say, multi-step computations on the main Bitcoin chain could actually be a really interesting thing to integrate with on the Clarity side. But if you're trying to get an experience of like a full-fledged smart contract language, like a modern smart contract language, the kind of features that you would expect, like that's not what Sapio might be designed for, if that makes sense.
Gotcha.
Awesome. Thanks for the question, Adav. Hey, John, do you have a question?
I guess it's me or the other John, maybe.
Oh, okay, that's great. What about John Applegate?
Okay.
Hey,
May I have
Clemens.
already gone?
Possibly.
Hello.
Hello.
Hey. Cool bio. Thanks. All right. Well, thanks for giving me the speaker podium here. I don't have a question. I just wanted to sort of briefly mention a different way of building smart contracts on Bitcoin that I've been working on lately. I don't know if this is the right room for that or not.
No, but we'd love to learn about it. Definitely.
All right. That sounds great. Okay, cool. So I'm a sort of big fan of stacks and block stack in general. And sort of I'm working on a sort of very related project called the Bitcoin computer. And sort of our goal is also sort of to make smart contracts possible on Bitcoin. And sort of it started out sort of just trying to make a point. So when I entered the crypto industry a while back, there was a lot of talk of Ethereum, and everybody kept talking about how smart contracts are impossible on Bitcoin. And sort of I started thinking about whether there might be a way to do it. And sort of the goal was really sort of to make the vision of Ethereum into a reality, right? So to me, the vision of Ethereum is to sort of create a new and sort of more decentralized, more accountable way of building tech companies. And sort of I wanted to try to build that on Bitcoin. And sort of I think Ethereum, it's been a great success, obviously, but it hasn't really realized this vision of creating a whole new tech industry. And in my opinion, there's two reasons for that. Sort of they're both, it's too expensive, and specifically, it's very expensive to create an Ethereum application, and it's very expensive to execute an Ethereum application, right? And sort of building the Ethereum application is so expensive because it's just so hard to find Solidity developers, right? So I just imagine your task being you have to hire 10 Solidity developers. It's very hard to find them, and if you do find them, they're going to be very expensive. So your development costs are way higher than the development costs for a normal tech project, I guess, right? And then obviously it's very well known that executing these smart contracts is also very, very expensive on Ethereum, right? So a single smart contract action can set you back $100. And that is even for very, very simple computationally undemanding tasks like just sending a token can cost $100. And sort of for that reason, if that's cost metrics, I mean, it just wouldn't make sense to rebuild Uber or Airbnb if every time you book an Uber, it costs you $100. Nobody's going to use that Uber, right? So if we want to make this vision of a decentralized tech industry a reality, we have to sort of drastically reduce the cost. And sort of, so my approach is called the Bitcoin computer, bitcoincomputer.io. And it turns out there's actually a very simple connection between just compilers and how programming languages are evaluated and how the Bitcoin blockchain works. And sort of that's exactly what the Bitcoin computer does. And sort of it's essentially a compiler for any higher level programming language, into a smart contract language that runs directly on Bitcoin. And so currently we're supporting JavaScript.